Bitcoin has begun breaking out above this short-term downward sloping resistance line, and it's interesting that Ethereum has actually led this breakout once again. Ethereum has been leading a lot of these breakouts, and recently Chainlink managed to get a huge bounce off the low $7 range, sending it up over 50%. And I also want to discuss the S&P 500 and why my recent bearish bias may be soon proven wrong. All of this and more in today's video. What's up, guys? Welcome back to the channel. My name is Kevin Svenson, and today we're going to be talking about the price of Bitcoin, Ethereum, Chainlink, and also the S&P 500 and why my bearish bias that I was talking about for the past couple of weeks may be soon proven wrong. To start off this video, I want to talk about the S&P 500. A couple weeks ago, I was talking about the bearish divergence that was developing for the S&P and how I was very worried about a potential major correction in the stock market and how this could negatively affect the price of Bitcoin, because we have observed that Bitcoin and the S&P do have a strong correlation. About 80% of the time, Bitcoin is correlated to the S&P on the weekly chart. And looking at the weekly chart for the S&P, on Friday, the week ended with a bullish hammer. And if we go into the 4-hour chart, we can see that the week ended with a push above the falling wedge pattern. And if you guys don't follow me on Twitter, definitely follow me on Twitter. On Friday, I posted and said, now that the S&P broke above the falling wedge, I'm going to begin hedging against my bearish bias and start to reaccumulate some cryptos with the profit that I took a couple weeks ago. And so far, it's been working out really well. The S&P developed bullish divergence on the MACD histogram, and we're starting to build some positive momentum here as we're breaking out today. And this is all lining up with Bitcoin starting to push above that resistance line and Ethereum starting to push above that resistance line. In my opinion, it's very important to ask the question, what is now going to happen with the S&P 500? Well, one interesting thing to look at is the historic data for the S&P 500 and what we usually do during election season. If you compile all the historic data for the S&P over the past 59 years up to 2009, what usually happens, the blue line here, what usually takes place during an election is we see a major correction, a double bottom, and a pushback to the upside. And this usually happens in the month of October. Now, we are not in October yet, so it's still up in the air, right? It's still a bit of a question of what's going to happen here. But what we could potentially see is maybe a push up and then a retest of the lows again before rallying into November. This is potentially the type of scenario that we're going to be seeing play out here if we were to consider the historic data and how this correction before the election usually plays out. Now, this is obviously not guaranteed to happen. This is just what normally plays out, is some sort of double bottom formation before we rally into November. Now, things can be different. This doesn't have to happen. Recently, I was very cautious about everything, right? I thought it was becoming more likely that we were going to see a major breakdown towards the $3,000 level. And seeing a breakdown like that would have not been very good for crypto, right? If we saw that kind of a breakdown, which is what, and this is more so what I was expecting, if we saw something like this play out for the stock market, there would have most likely been, like a waterfall scenario where the price would, dump down to, at least the low 9K range, if not 7K range or lower. But the good news is that we are potentially avoiding this situation right now. The market did not get as bearish as I expected, and we're starting to rally up above this falling wedge pattern. So it is possible that the scenario that's playing out right now is less like this scenario and more like this scenario here, where we create this falling wedge type pattern, just as an example, we break out and we recover moving forward, right? It's possible that instead of doing something like this, we're going to be doing something more like this right now. Obviously, if we do reverse back down, and this is some kind of bull trap, and we break below 3,300, if we break below 3,300, then basically what happens at that point is my bearish call from a couple weeks ago becomes valid again. And basically I was just a little bit too early on my call. So there are still some risks, and we should still stay a little bit cautious here. It's not confirmed just yet that the stock market is good to go to rally up. There's still a lot of uncertainty here. So I would say just stay cautious. So what does this all mean for the price of Bitcoin? Well, let's start off with the weekly chart. Bitcoin is still above the blue 21-week EMA. And the 21-week EMA is a good indicator to tell you what direction, what side the market is on. And right now, even though things are kind of neutral here, we are erring on the bullish side, right? We are still on the bullish side, according to the chart, that we are above the 21-week EMA. Looking at the daily chart, we can see that Bitcoin today is starting to pop above this recent downward sloping resistance line, and we are breaking above the 21-day EMA. In the short term, there are a multitude of possibilities, and I'm not too biased about the short term. We are above the 21-day EMA, which is a slight bullish indication. If we can get above 11,000 or 11,200, then that would actually send us most likely up towards 12,000. But there is a possibility that things could remain quite boring for a while. And the only scenario that I would see Bitcoin coming back down to the low 9K range is if the S&P actually had a bit of a bull trap here, a bit of a fake out, and started to reverse back down immediately. If that happened, then of course Bitcoin is going to get quite bearish again. So the global market situation is still a bit uncertain, and my bias for the short term is not very strong. I could see a lot of things happening here, which is obviously not all that helpful, but I'm just being honest. Now, moving on to Chainlink. Chainlink has been really interesting recently. Chainlink saw a major correction down to the low $7 range and has finally found some major support and bounced up. What you'll notice about the Chainlink chart pretty much right away is that we held above the 21-day EMA for pretty much the entire run until we saw Bitcoin, the S&P, and everything reversed, and Chainlink followed to the downside, breaking below the 21-day EMA. And we use it as resistance on the way down, and we're still below it actually, right? So this is our current resistance. If you just go from the last major high here to low, we can see that this resistance is coinciding with the 618 fib extension and the 21-day EMA. So this is the area that we need to get above. So what I'm looking out for right now is Chainlink needs to basically confirm a daily candle close above the 21-day EMA. And if we can do that, at that point, we would very likely head towards that last major resistance line, which is coming in around $13.25, would be the next major upside target. And if we are unable to do that, if we can't confirm a daily candle close above the 21-day EMA, that's when Chainlink is probably going to come back to retest about $9.20, that previous low right here, which is a very key level. If we can hold that level on a pullback, that would actually be pretty good market structure overall. We'd be using the 21-day EMA as resistance, right, as we're down there, and maybe end up creating some sort of inverse head and shoulders pattern before breaking out to the upside again. If Bitcoin sees a major push to the upside sooner rather than later, then we might play out this first bullish scenario with an immediate punch to the upside. If not, maybe Chainlink will pull back to about $9.20 and look to create some support along that level, and an inverse head and shoulders along that level, along $9.20, would be an indication that the bulls are regaining strength and regaining the momentum. And this would overall be a pretty nice base of support to work off of. So I just wanted to give you guys an update today to discuss how things may not be getting as bearish as I thought. We did see the bearish divergence on the weekly play out to a good degree, but maybe we won't get as bearish as I expected. We are seeing a break back to the upside, and if we can maintain this area, we might actually rally towards the end of October, and things might become very bullish once again. But remember, things in the world are not all that great, and we'll see. Nothing is confirmed just yet. Definitely be a little bit cautious here, and be sure to sign up with the CryptoWatch platform. Click that link below. They just added the volume profile tool. Most other charting platforms actually charge money for you to use the volume profile tool. And on CryptoWatch, it's now free. Signing up for CryptoWatch is free, and also using the trading features is also free. So you got nothing to lose. Click that link below and sign up now. And I'll see you guys in the next video.